Namaste to all. Dear students, we are here with a chapter called Insurance Claims for Loss of Stock and Loss of Profit. These two are the topics you are having in the insurance claim. Huh. Insurance is a indemnity contract where if any loss sustained by the it sustained, then insurance company will indemnify the insurer. So that is the concept. So when loss is occurred in such a case it should be calculated how much claim should be paid to the insurer. So for that purpose accounting treatment is what how it will be dealt that we are going to study in this. So let us see. Claim for loss of profits, that is, loss of profit policy normally covers the following items: loss of net profit, any increased cost of working. Okay, some important terms we need to understand in this chapter. Those are nothing but these things. In case of loss of profits policy, these will be considered. So, what is the net profit loss? Suppose um, you in your business premises fire broke out and most of the premises have been destroyed. So though you are having insurance uh, coverage, but due to uh, destruction, the place where you are doing business, the business premises will also be get affected. So people are uh, willing to come to your business location, being it is locally located to their um, market and other things. Suppose your business is shifted to some other place where people may not know much about you, or if you uh, change your location from one business location to other, the profit initially which you are getting will not get now. So that is why there will be one more policy of loss of profits. So that is what here, and increased cost of working. Suppose you have changed to another place. Previously the business premises were your own business premises, no need of rent and other expenses relating to it. But now you are shifting to another place where it is on rental basis. So cost of working is also get increased. So it is also covered under claim of loss of profit. Gross profit, net profit plus insured standing charges, or insured standing charges minus net trading loss if any into insured standing charges divided by all standing charges. This is what gross profit means. Generally gross profit means net profit of the previous year plus insured standing charges will be your gross profit. How to get net profit? Net trading profit exclusive of all capital receipts and ascertained all outlay properly charged to. This is nothing but So net profit for the previous year we need to consider, and insured standing charges. Okay, these are nothing but interest, debentures, mortgage, all fixed जो expenses रहते हैं वो सब ले लेना है. Okay, and rate of gross profit, the rate of gross profit earned on turnover during the financial year immediately before the date of damage. प्रीवियस ईयर का जो ग्रॉस प्रॉफिट रहता है बिफोर गेटिंग accident, that we need to consider, and annual turnover, that is turnover during the 12 months immediately before the damage. These are the few things we need to remember as a terms for the loss of profits policy. As I said, there are two types of policies. One is loss of profits, another one is loss of stock. The amount of claim in case of total loss or partial loss. Let us discuss first about total loss. So total loss, so whatever stock you have in your premises, fully goods are fully destroyed. In such a case, actual loss provided the goods are fully insured. Suppose you are having a closing stock in your premises of 1,50,000 and you have taken average stock of worth 2 lakh policy. क्लोजिंग स्टॉक 2 लाख रहता बोल के आपने ले लिए. So our 1,50,000, whatever closing stock is there, your policy amount is also fully covered. So provided goods are fully insured, in such a case actual loss whatever you are having will be your amount of claim. In case of partial loss, suppose in case of partial loss, here we are discussing where goods are partially destroyed, where it is not fully destroyed. Suppose you have taken some measures to stop the accident, and out of 1,50,000 closing stock, some of 50,000 worth goods have been salvaged from the fire accident. So partially only goods have been lost. Actual loss subject to being fully insured or whether average clause is applicable or not. That is the thing. Means when goods are partially lost from the total closing stock, we will deduct the salvage stock. So actually how much stock is destroyed, that will be considered. If total whatever closing stock is there that is fully insured, in such a case you will get full actual loss of 1 lakh. Otherwise we will get the lesser amount subject to the average clause. So amount of claim in case of under insurance, when full insurance is not taken, when full insurance is not taken on the closing stock laying with the business. In such a case, in case of total loss restricted to the policy amount, suppose you have taken a insurance policy of 1 lakh, but average stock in your premises is 1,50,000, and at the time of fire accident you have taken only 1 lakh policy, but your closing stock is 1,50,000, so fully not insured. So total 1,50,000 is your loss, but restricted to the policy amount 1 lakh. So you will not get amount more than the 1 lakh. Suppose it is a partial loss without average clause or with average clause applicability, we need to see. So without average clause, actual loss or sum insured, whichever is lower. Suppose you have lost goods worth, I said you are having 1,50,000 at your premises and you have taken the policy of 1 lakh. Okay, and average clause is not applicable. Okay, average clause is not applicable. In such a case, how much stock you have salvaged? 50,000 worth you have salvaged. How much you have lost? 1 lakh you have lost. So actual loss or sum insured. What is your insurance value? 1 lakh, and actual loss also 1 lakh. So 1 lakh will be given as, suppose you have salvaged only 30,000. So out of 1,50,000, 30,000 has been salvaged. So your loss is 1,20,000, but your policy is of only 1 lakh. So how much amount will be provided? Actual loss or sum insured, whichever is less. So actual loss is 1,20,000 and insurance policy is 1 lakh. So you will get lesser amount, that is 1 lakh. Suppose stock destroyed is 60,000 and your premises having closing stock of rupees 1,50,000. 1,50,000 minus 60, 90,000 is the actual loss and insurance policy is of 1 lakh. How much insurance claim you will get? 90,000 only you will get. In case of partial loss without average clause, we need to see like this. With average clause, what we will do means, when we are we assume when average clause is applicable, that means both insured stock uninsured stock both are there at the premises. In such a case, we will segregate the loss for both इंश्योर्ड पोर्शन एंड अनइंश्योर्ड पोर्शन, दोनों में से भी लॉस हुआ जैसा सोचना है, और जिसका इंश्योरेंस है उसी का क्या मिलेगा? आपको क्लेम मिलेगा. जो स्टॉक इंश्योर नहीं करे उसके लिए नहीं मिलेगा. एज आई सेड, out of 1,50,000 you have taken policy of 1 lakh, remaining 50,000 you have not taken. Out of stock destroyed also, 50,000 proportion will not be claimed, only the 1 lakh proportion only we need to claim. So proportionately you will get the insurance claim. That is nothing but loss of stock into sum insured divided by insurable amount. Okay, that is total cost, that is divided by the closing stock on the date of claim, that we need to consider. This is what we have to do in under insurance. With the calculations and other things, you will get it more clear understanding. Let us see closing stock, sorry, loss of stock policy calculation, how we should do loss of stock calculation. This is what the explanation which I already gave. Claim for loss of stock, loss of profits, both will be there. Insurance claim can be studied under two parts, under claim for loss of stock, claim for loss of profits. So कैसे loss can be occurred because of such as fire, floods, theft, earthquake, etc. Just now I have explained total loss, partial loss, with average clause, without average clause. This is what we are need to study, and how to calculate